What's going on, Ape and Apettes? Welcome back to the channel. I hope you guys are having a great day, and thank you for giving me your ear here this afternoon. So AMC is holding above $20 per share, at least at the time of this recording. We're heading into the end of the day, and it'll be very interesting to see if we do hold above $20 per share. But I do think by the close of after hours, we will hold up that critical support level at about $20 per share. Why is this so critical? Because this is really where I personally believe the fundamental valuation has been tested, and we are seeing buyers coming back into the stock. If we do flush under 20, what could happen? I possibly see a move down to $18.50. People are saying a $17 gap fill. I don't think that makes as much sense to me as $18.50. I think it's going to be hard to even break under 20 unless we do get more fear into the markets, but we are getting some catalyst out of the way here today. As far as Citigroup, profit declines 26%. There you go. Citigroup is in pretty bad shape as far as their earnings that just came out. Retail sales dropped 1.9% in December as higher prices caused consumers to curb spending. This was only estimated to go down 0.1%. And then last but certainly not least, JP Morgan shares went down about 5%. As the firm is no longer going to be able to meet its 17% target for returns on capital, and that they're essentially going to have to start paying their employees more to keep good employees, and that is going to raise their cost, basically their operating costs, about 8% next year. So banks are taking a hit. Not really getting any clear guidance as far as next year just yet, which is very interesting because that's usually what happens the fourth quarter, or the beginning of the year of the start of a new year. So we're not really getting any of that information. Probably they don't want to move the markets around all too much. That's as far as the news is concerned today. Other than that, we did get the consumer sentiment that dropped in January, according to preliminary data from the University of Michigan, falling to 6.8%, or the lowest level in a decade. So what that is telling you is that your average people, you and me, we think inflation is going to run hotter, the economy is not going to do as well. And those expectations tend to feed into what actually tends to happen. Just like inflation, people expect inflation, so businesses start to raise prices before they ever see their input costs going up. So that's really flying under the radar, but it did cause the markets to take a bit of a downturn today. And overall, it's a lot of back and forth in the marketplace today, with the Dow Jones down 1%, S&P down 0.36%, and the Nasdaq flat on the day, and the Russell 2000 down about 1%. There are stocks that are doing decent today, but some of your bigger names are down a little bit. Overall, a pretty muted day, but what to expect for next week? Not too many actual big catalysts that are going to move the markets, but we do have earnings, and those are a lot of small catalysts that can move the markets. So keep that in mind. We're going to start having a couple hundred companies reporting every single week here for the next couple of weeks, and depending on what these numbers come in at, that could definitely throw the valuations around quite a bit, because we have high inflation, we have the Fed sucking money out of the economy like a vacuum cleaner, and that's all fine and dandy until you start to see companies and their earnings starting to decline. That's when you get issues. That's when liquidity will really be restricted. And a lot of that, if you guys seen the videos earlier today, you probably know all of that, but let's take a look at what AMC is doing right now as far as the technicals are concerned. And still, the only thing that I really want to see as far as a potential upside move is obviously to break out past $25 per share, but ultimately break out above this 20-day simple moving average, which is at about $25.81 per share. That will be incredibly bullish once we do, and then once we break out past 30, we should fly past our 100-day moving average, 200-day moving average, as well as the 50-day moving average, and those are all consolidated in between $32 and about $36 per share. So a tight range there. Once you're above really that 100-day moving average at the top end range at $36, that's when you really start to see a lot of bullish sentiment and a big move to the upside that will come for the stock. Now, as far as the MACD is bearish, but it's not a far gap, so we're hardly bearish, and this could flip-flop really at any moment if we did see a very strong green day. So that's a good thing that we're just going down, but the MACD is not progressively getting more bearish. Hopefully that makes some sense to you guys. And if I were to imagine next week, I think earnings are going to be relatively decent. I don't think it's going to be a reason to drop everything and to start shorting everything into the ground. I think that's going to be next quarter, Q1 2022 earnings coming, by May, April. That's really going to be what you need to watch out for and hedge your portfolio for if you're invested in other stocks as well as even AMC. Not a bad idea to play some of the downside, and that all revolves around the theory that I have been putting out in multiple videos, so not going to get into that all too much. As far as next week, if for whatever reasons earnings are bad at the big companies that have really propped up the markets, because after all, we are in a deep bear market unless you're in the Apples, Nvidias, Googles, Amazon, even Tesla's starting to get down there, then if those stocks start to fall, that's when you see a reason to short everything else, and that you could see that move to 1850. I think it's highly unlikely to break under 20, but still, I'm not a fortune teller. I don't know exactly what is going to happen, and I am certainly not a financial advisor as well. So always come to your own conclusions, do your own research, all of that good stuff. As far as the 13F filings that are coming out, take a look at this, guys. Just an odd thing right here, kind of comical. 19 shares this firm owns. They increased their position 375%. But take a look down here. This firm has almost 3,000 shares, Exchange Traded Concepts LLC, and they increased their position by 759%. Another 172,000 share position by DNB Asset Management increased their position by 254%. As well. What's going to be very important and what I want to see is Citadel, Sequoia. I do also want to see Renaissance Technology because they are the best performing quant hedge fund of all time. So I want to see what they have done with their positions, and those should be coming out here fairly shortly. So keep that in mind, looking out for that, and I'll bring that to you guys as soon as they are posted. As far as the Ortex data, we're looking at 19.26% short interest of free float, about almost 99 million shares that are sold short. The cost to borrow is going up a little bit right here for the cost to borrow max and moving in the right direction, but I have a hard time believing these numbers because if you're going to short sell AMC, no brokerage in the world is going to let you or me short AMC for less than 2%. No way in hell I believe that. So I'm not saying we would, but I'm saying if you try to, you're not getting it for 2%. So that interest rate is still going to be hurting these short sellers once the stock does not stops going down pretty much. Share utilization 75.34%, days to cover at 2.47, pretty typical. Not too much has actually changed in that regard. Still looking beautiful for the eventual days to cover to come down and the stock to go up. As far as the stonk tracker data, pretty much the same as we went over. It's really starting to populate on the January 21st expiration date with 630,000 calls that are out of the money, 87,000 calls that are in the money, 114,000 puts that are in the money, and 280,000 puts that are out of the money. So looking good right there. And considering all we have next week is earnings, if earnings are good, then I would expect a move to the upside next week and to see more calls even run into the money. Last and final thing is the max pain, and this is something that we have talked about today as well. Just to throw it in here real quick, is $23 per share, so it doesn't look like this correlation always works, so keep that in mind. I know there is a lot of diehard fans of the max pain. It's not always a 100% indicator, just like nothing else ever is. So that's the situation. I bought more shares today. I am holding all my shares. I am not deterred whatsoever. This is just better, in my opinion. We get to acquire more shares at really a fundamental valuation. So all is looking good in that aspect. That's going to be all for this video. Hit the like button, subscribe to the channel on your way out, as well as if you guys want access to all of my trades in real time. Link for that in the pinned comment down below, as well as check out Moomoo, Public, and Webull to get yourself some free stock, because why not? Free stock is free stock, free money. I'll take that any day of the week. So love and appreciate you guys. Thank you for watching. I will see you in the next one.